So the way I caught these trades right here, these two, um, first I can see that there was a major trend line being created after this big drop. You know, once I seen it started to have some retracement, I drew my trend lines, and this is really like on the daily time frame. We're on the 4 hour right now, but I drew this major trend line off of the daily, scaling down to the 4 hour. I knew that price would continue to go up. I didn't take any trades right here as I should have, but um, as I seen it was going up, I drew another minor trend line, and I can see that price was respecting my trend line and the supply and demand zones. So when it actually came down to this part, I forget it. When it actually came down here, I drew I drew this I drew the supply and demand zone because it broke, you know, it broke this level. And, I just drew it with the wick where the wicks are. This is on the 1 hour. Could have went down to the 30 minute or the 15 to find, better levels that would match up. But this was cool drawing it on the wicks. It actually closed above and came down and tested it. But when it came to test it, it tested it on a level of support which used to be resistance. Then it was respecting, look at these two wicks on the 1 hour. Then it was respecting the trend line, right? And I also think that you could have used Fibonacci for this. Actually came down to test the 50%. It came down to test the 50% level. Look how the 50%, well, not the 50%, my bad, the 0.5% level matches right up with the supply and demand zone. You know what I'm saying? So that's why I drew that supply and demand zone. Feel me? That's why it came back down to test that supply and demand zone on the trend line, and it had a bullish engulfing. So I really waited for a pullback, go down to the 30-minute or the 15. It had a bullish engulfing. Now I could have got in on this retracement or this retracement right here. My confidence was up there, but it went up. It came back down a little bit. I think I did a little Fibonacci right there and got in on the next bullish engulfing. You feel me? So that's how I got in this trade. I seen that it came to test support, which was resistance. It's also respecting this upward trend line. You feel me? And a Fibonacci. And then it had the bullish engulfing. Oh, okay, it's going to go up definitely. It's a bullish engulfing on the 15, and I believe there's a bullish engulfing on the 1 hour. Yep, there's a bullish engulfing on the 1 hour. Perfect candlestick setup. Could have got in on this retracement, but I got in on the bullish engulfing around this area. Now, over here, you can see that price didn't want to come above this line. So I caught this trade over here. So all of this hasn't happened yet. It hasn't happened yet, but I can still see that there's been a triple top. I also see that every time it rejected off of the resistance level, I drew a trend line. When it broke the trend line, I wanted to see if it was going to break the level, if I was going to look for a buy. First, if I was going to get in for a buy, I wanted to see it break the level, come and retest it, and look for rejections. But it broke my trend level, broke my minor trend level, my minor counter trend. Didn't want to close above this resistance. trend, trying to just follow the trend. Didn't come back. Started to respect this trend line right here. Closed above. I was really starting to think that it was going to be bullish. But once you seen the third rejection and this heavy bearish engulfing with the wick, it tried to go up there. You feel me? It tried to, but still closed below the resistance level. So this is a strong resistance level on the 1 hour, on the 4 hour. On the 4 hour, you see, look at all these wicks. That's where I drew my resistance level, matching up all these wicks. It really wanted to go up there, but it shot right back down. And look, on the 4 hour, bearish engulfing came. Oh, wait. I got in already at this point. Let's go back down to the 4 hour. I mean, the 1 hour. Boom. Really, once you've seen this bearish engulfing, this third bearish engulfing after the wick has already went up there and then closed below, you really should have been looking off of this pullback right here. Would have had the best entry. I'm telling you, would have had the best entry. But, you know, I get in, I see this bearish, bullish, bearish pattern, right? And also closes with a bearish engulfing. So you can go down to like the 30-minute, maybe 5-minute. Nah, on this 15-minute, you can see that this was the bearish engulfing right here. This was the bearish, bullish, bearish pattern. You feel me? Came up to retest, could have got in right here. Once you seen that it wasn't closing above this level of resistance, you really could have got in. You could have got in right here, right when it closed. When it closed below this level. This level right here was a very important level. You know what I mean? It tested it. It was testing it, and then it closed below. So even when you came in right here, or you seen this bearish engulfing and it retested, could have got in. Boom. Took it all the way down. Sometimes I want to keep, I closed a little early on this one. It was down here though. I seen the exhaustion area, and I closed because I really wasn't trying to risk that much. It already came down. I seen it exhausting, so I was just gonna close out. But my main target was right here. I mean, it did hit, but look what it did. It came down all the way back up. Would have closed me out if I came break even, But I didn't want that. I seen the exhaustion area and closed. So basically, that's how it is. To sum it all up, I only got in this trade because it was respecting this trend line. Higher high, higher low, higher high, higher low, higher high, higher low. Every time it made a higher high, I looked for the wicks on the previous high and made a resistance/support level or supply and demand level. Once it respects that supply and demand level and it respects the trend line, it did that twice. It respected the trend line down here. This was, a little fishy. You still could have got in right here. But look, high, tested it on the trend line, goes up. Once it goes up, you see that it made a bullish engulfing on a what? This was a high. This was a high. So you draw supply and demand. It came back and respected the supply and demand with a bullish engulfing. Came all the way up. So the fact that it didn't come right back down, the fact that it shot up this hard, you see what I'm saying? Oh, pause. The fact that it came up this high and really didn't go back down shows that it's a very bullish move. Even on the 4 hour, you can see. Even on the 4 hour, you can see that no wick was really made on this candle. This shows that buyers are really in control. It really didn't want to go down, but it has to. It doesn't have to, but This is what price does. It comes down and retests that level that it crossed. And really, as I analyzed the monthly and weekly and how this 4 hour candle didn't make a wick and how it's still bullish, I still believe buyers are still in control. Why? Because first, it didn't break structure. It just came to test the previous resistance level. And look at these wicks on the 4 hour. Wicks are being created. So we're going to have to see how next week is going to be set up. I really believe that it's going to make more higher highs and higher lows. You know what I'm saying? So it broke the trend line though. So it may go up a little bit more, but maybe not too much, but we'll see. But yeah, that's how I got it. Thank you very much.